Now, joining us to discuss the Finance Act 2020 is Ayodeji Ebo, the head of research at Greenwich Merchant Bank. Hello.
Hello, good morning.
Good morning. Thank you for joining us and Happy New Year.
Yeah, Happy New Year. Thanks for having me.
Yeah, so let's get into it now. The 2020 Finance Act has been signed into law. Let me get your thoughts on the act.
Okay, thank you. The Finance Act, it's a fiscal legislation that helps to itemize or provide guidance on some of the tax law, tax regulations, rates, incentives, and levies that should guide the business environment for the year. And this is commendable because this is the second consecutive year that government would be presenting that or signing that into law after over 20 years of non-amendment. So we that this is positive for provide clearance and also help you most times identify some of the tax revenue gap that government is also trying to solve, and keeps most of this tax law and policy aligned with global best practice. Now,
Ayo, there's been a lot of conversation about unclaimed dividends and dormant account balances in the 2020 Finance Act. Now, the Finance Act states that unclaimed dividends of listed companies and dormant account balances in banks, unutilized for 6 years or more, are to be transferred to an unclaimed funds trust fund and will be managed by the Debt Management Office. What's your take on this?
Okay, very interesting. The issue of the unclaimed dividend has been the front burner of the Securities and Exchange Commission in the past few years, but I think not much has been achieved based on the process. And also looking at it from the bank angle for dormant accounts or dormant balances accounts that have been dormant for 6 years. So starting looking at it from the investor's perspective, the unclaimed dividend affects the capital market investors. We feel that we still expect some form of clarity around how claims will be made. Yes, the government has promised that interest will be paid on this, which we feel that that is positive because currently no interest is being paid on the amount that is being held, even when you claim it. But there needs to be clarity to provide confidence. And because the liability is also for the government, is also in Naira, so there's no cause for alarm. These funds would always be made available, but the process has to be seamless. And looking at it from the bank perspective, which is the major part of it, when you look at total deposit within the banking system is around 35 trillion, and that's if we assume it should be that, though there's no official figure around the amount of dormant balances, but maybe close to 10%. So that's very significant. And if government will be assessing this, it means that the amount of government liability would also increase. And now with also the promise that interest will be paid, so debt servicing would also skyrocket, and which is looking unsustainable based on our actual revenue performance in the past.
Ayo, please let me get more clarity on this. Talking about interest being paid on it, who gets this interest? Because if we understand what unclaimed dividend is, I mean, it could be someone who has shares, and then perhaps you're dead or you don't even know. Okay, so who gets this interest?
I would presume that it should be the investor that should get the interest because it's the investor that have not been able to have access to those funds for the period of time. So it should be I would presume that it should be the investor that should get it. And also for customer, for the dormant accounts, that looks a bit tricky, but I believe that for the dormant account, maybe a base interest rate will be paid, or maybe will be split between the banks and the customers, because the bank is also holding those funds in custody for the customers.
Okay, so the Act states that small and medium companies engaged in primary agricultural production may be granted pioneer status for an initial period of 4 years and an additional 2 years, making a total of 6 years. Is this good enough?
Yeah, I think this is a step in the right direction, because if you look at the structure of the Nigerian economy, the small and medium scale enterprise accounts for over 50% of business activity as well as employment. So what government in essence is trying to do is to provide incentive. And looking at the agri space, that contributes over 20% to GDP, and in terms of employment contributes over 25% to employment. That is very significant. So if we can achieve a major boost within this sector, it would have a significant impact on GDP, it would have significant impact on employment, and that will reduce insecurity. Looking at the agri space, there needs to, part of what government in essence is trying to do is to provide incentives for more people to go into that space. But beyond just the production, we need to look at the processing, which we need to add value. If you look at the amount we spend in importing, it's very significant. And if we can also invest and provide those incentives across also processing, so that we have more investment within that space, that will also be good, and that would also increase employment rates in the country. So I believe that this is positive news for these small and medium scale enterprises. But beyond just having this in the Act, I think maybe the NIPC should also broaden this, take this up and provide the process, the access of how people would be able to access this, provide some form of awareness, because there's always that knowledge gap. So a lot of the SMEs, some of them don't have access to the media, and they really don't know that some of these things are available. So there needs to be awareness. You know, that takes me, if you look at the Africa Continental Free Trade Zone Agreement, when you speak with a lot of even the business owners, a lot of them are not aware of the opportunities within that space. So there needs to be significant awareness so that we can harness the opportunity within this space.
Okay, looking at this act, again, it exempts low-income earners on 30 naira per month or less from personal income tax. How does this benefit this group of people?
I think that it's going to be a cheery news for the low-income earners. And when you look at the pyramid, you have more people within that space. And if you convert the $30,000, look at it in 30,000 naira rather, if you look at it and convert it to dollars, it's around $2 per day, which is really very low. And with the high inflation rate, this savings of, when you look at the personal income tax based on the rate, they are supposed to be charged about 7% based on their income, and that's a bit of savings for them, which also reduces the burden and increases their purchasing power. So I think this is positive, and at least it's a form of relief amidst these current economic challenges.
So the Act calls for a reduction of import duty on tractors from 35% to 5%, mass transit vehicles for transport of more than 10 persons, and trucks from 35% to 10%, a reduction of import levy on cars from 30% to 5%. How will this impact the automobile industry?
Okay, thank you. I think to just provide a bit of background, you notice that in 2014, the automobile policy was setting to see how the local production can be encouraged. As of 2019, it's been estimated that the capacity in terms of the capacity of the sector is over 1 million cars per annum that is needed. And when you look at production, it's still around 15 to 20%, which still leaves that significant gap. So then the tariff was reviewed, was increased to about 35% for both used, that's the import duty was increased to 35% for both used used cars and new cars. So what, in essence, this is saying is for used cars, what you have is import duty. So this does not affect what government is reducing, does not affect those that are importing new cars. It will still remain 35%. But for used cars, you have about two main levies. You have the import duty, you have the import levy. Import levy is the part that has been reduced from 30% to 5%, which means that effectively reducing it from 70, about 65 or 70% to about 40%. And that's for new cars to encourage maybe the use of new cars. So by and large, also looking at it from some of the commercial vehicles that would also has been reduced, and also equipment for agric, that's tractors. This is also to encourage, it's a form of subsidizing production, which yields more multiplier effect or higher multiplier effect than trying to subsidize consumption. So I think this is also positive. And if we look at what, in summary, what a lot, most of these, the item that has been highlighted is, we know 2020 was a challenging year for Nigeria amidst the COVID, and we're also trying to survive. So government is trying to provide some form of relief, some form of support, so that the rate at which we'll be able to recover will be faster than anticipated.
Yeah, you talked about this actually trying to encourage people to go for new cars, but just wondering how many people can actually afford new cars?
Yes, that's you have. I would say you have a major point there. But what government is also trying to do is also trying to protect the local manufacturers. So there's this law, this ECOWAS law on emission that prevents Nigeria from importing cars that are above 5 years. That would also impact on the cost of used vehicles, and that will not that would may shift also focus to new cars as well as locally produced cars in Nigeria.
On stamp duty, the Act has scrapped stamp duty and replaced it with electronic money transfer of 50 naira and applicable to transfer of 10,000 naira and above. Your thoughts on that?
Yes, I think in essence, it's what I think the Act, that portion is trying to do is to ensure that for the stamp duty, which was also 50 naira, which more for bank transfer. Now it's more of nomenclature. It's been changed to electronic money transfer, EMT, also at 50 naira. But also looking at the sharing formula. So the stamp duty have all been shared with the gross monthly. What I'll say that the gross monthly allocation shared at the FAC meeting on a monthly basis at the rate of 15% is kept by the federal government, while 50% is given to the state and 15% to the 35% to the local government. But what this Act is now saying is that 15% comes to the federal government and 85% goes to the state. So this may also be seen as a way to boost the allocation that goes to the state on a monthly basis. If you look at the average FAC allocation, is been around 600 billion naira, from the high of over 700 billion before the COVID period last year. So I think it's also a way to provide that support, because there are some of the states that are mainly driven by the FAC allocation, ability to pay salaries. They are driven by some of those events before you see major activities in those states.
Okay, let's look at aviation now. Commercial flight tickets have been exempted from VAT. How will this affect the sector going forward? Okay,
I know this will be positive news especially for most of the customers or passengers rather, because if you look at late last quarter, the price of flight tickets increased significantly. So that would also use that impact. And there are also other costs, because if you take an holistic view of that sector, there are a lot of challenges. The high cost, and well, you hardly find any major airlines that is surviving a very long period. So there needs to still be an holistic overview or review of that sector to see how some of those major bottlenecks can be taken care of, so that their businesses are sustainable. They are more sustainable in the future.
Now, Ayo, generally, about 20 new key changes were made in this new Finance Act 2020. Are there any of them of concern to you?
Yeah, I think that for me, I think for most of them are in line to see how the government wants to provide support for the economy, for the citizens. And there's this other area that we've really not. When you look at the budget 2021, you will discover that about over 50% of the revenue is being projected from government-owned enterprises. And they increased the amount of government-owned enterprises that will be captured to about 55. And what in this act, what they are saying, what it has said is that, or what it stated is that on a quarterly basis, the operating surplus will be moved. So it will no longer be annual basis. So that would also provide some of control for the government, so that they can also try to meet up with their target within that space. Because when you check the past performances within the independent sources or government agencies, MDAs sources, you always see that they always lag behind significantly within that space. So I think this is an annual legislation that would help to support. So if there are any downside, some of those things would also be taken into consideration in the new Finance Act that would be signed into law in 2021. So I think that would be of any major concern.
We appreciate your time always, Ayo DG. Thank you.
Thanks for having me.